We got a lot to talk about, Professor, and it's great to have you on this Friday. So you're going to walk away to the weekend thinking what now about this rally?
Well, Scott, when you have trending stocks, when you have momentum stocks, there's a very old saying in Wall Street, and it is up the staircase, down the elevator. And if you take a look at NVIDIA and other trending stocks, that's what happens. Momentum players move on. They have very tight stops on it. As long as it's going up, they're there. And as soon as it breaks their trend line, boy, they're out. We have what's called a one-day reversal, new high, then low. My experience is that's rarely the final high for the stock. Usually you have a couple days, mixing on the price, and then it will resume its upward course. So this is something I've seen many times before, and does not scare me.
Okay, so the elevator goes down another floor or two, but then you get back on the escalator and you start going up?
Yeah, to consolidate. Yeah, that's exactly right. It's kind of like a head fake. I mean, playing the momentum play requires a steal because, when it goes down, it's so sharp. You say, oh, I'm going to get out. And then what happens, it goes back up to new highs, and you're so angry at yourself for getting out, you get on again. And it goes up another group. And then what happens at the very end, and I don't think we're at that very end, is you're saying, hey, diamond hands, I'm not selling this. It doesn't matter what. Unfortunately, that's usually the very top.
Well, Professor, now you're using some of the lingo from the meme stock mania.
Yeah, I'm not saying they're meme stocks at all because these are real companies. But take a look at what happened to Cisco in 1999 and 2000. I mean, this was a great company, got overvalued. But we talked about this last time. Could NVIDIA get there? Yeah, but it would be at a much higher price to get to what Cisco's evaluation was in 2000,
sure,
compared to what NVIDIA is now.
Does it tell you, though, when you watch a stock like this go up seemingly every day, and it just reaches these heights that make you sit back and say, I just can't believe what this stock is doing? Does it tell you that there's just too much froth in certain parts of the market, but not the whole thing?
It tells me that we're beginning to get the trend followers and the momentum players. And they don't care what the valuation is. They don't care what the stock does. They don't care what the company does. They got their charts. They say, wow, with this trend over there, make the trend your friend. And I'm making it my friend, and I got my stop there. I'm riding it up. Everyone's convinced that they can jump off the train before it goes off the cliff. And I'm not saying that NVIDIA isn't all ready to do that, but these are the games that speculators play, and I'm beginning to see more of those sort of players move into the market. But it's extremely early stage, not late stage, because 25 years ago, it had been going on for many years before finally it cracked.
But you're painting a scenario, though, in which exuberance starts to get a little bit irrational and then turns into pure euphoria, and that's when you have to worry. But you don't think we're anywhere near that stage yet?
Yeah, exactly.
What did you make of Powell on the Hill this week, who came off to many, maybe a little more dovish than expected?
Yeah, a little bit dovish. I mean, he said, and we're close. I didn't expect that. I mean, he could have shaded it. We saw that January report, a little worried. It means we got a lot more work to go. But I think, maybe got some inkling of, a rather softish, good wage number that we're having now, and seeing some slowdown, saying, we are very, very close. I think next Tuesday's number, CPI, and which of course is going to be the last one before the March 20th FOMC, is going to be quite important. I really like to see a reversal of that from the uptick that we had in January, and I think that is definitely possible.
How many rate cuts are we getting this year, Professor?
Well, we talked about that. If we get too many, I'd worry because that means the economy is crashing. So, you just say, oh, I just want as many as possible. No, you don't want as many as possible. And in fact, as Mike said earlier, it's much more important for the economy to stay strong than for us to have a rate cut in May or maybe June or earlier or later. However, I mean, I think my feeling is that we're going to have rate cuts. However, let me warn you, and how many days is it going to be? March 20th, 12 days. I think we're going to have less rate cuts on the dot plot than we did in December. Because I think, honestly, Fed officials are surprised and pleased the strength of the economy. And they say, we don't have to cut that soon, and I can afford to wait a little longer before I can squelch inflation. So that might rattle the market a little bit, but, it's only because of the strength of the economy, not because they're, stubborn and won't do it beforehand. In fact, Jay Powell says, I'm not waiting until all the inflation is wrung out before, I'm going to start cutting, which would obviously be too late at that point.